Good morning, traders. I hope everybody's doing well, trading well, having a fantastic day and enjoying the sun. A couple of pairs of interest to myself this week are Euro Yen and Pound Yen. Both obviously Japanese Yen related. If we look at the major first, Dollar Yen, it's still in its corrective upsloping pattern. The market does want to break lower, it just hasn't had much reason to do so yet. So start to pick out your key levels for price to break to give you a trigger point. But if we take a look at Euro Yen first, Euro Yen has exceeded its current range size. It's heavily overbought in my eyes. The most recent phase that we've seen is 21 weeks. Now, 21 weeks worth of buying is incredible. Now, when something becomes too expensive, it naturally attracts sellers to come and bring price lower. So we're now looking for some signs of exhaustion. We're now looking for some signs that the buyers are running out of steam. We're looking for markets showing overbought, extreme behavior. And this is what we're currently seeing at the minute. So if we just take a look at the most recent phases that we've seen on the weekly chart, we've had 16 weeks. We had a smaller one of 7 or 8 weeks. But again, this is 21 weeks, 22 weeks worth of buying, which is incredible. Now, naturally what happens is the market will never move in a vertical line. It breathes, it cycles, and we see phases like this. We like to call the moves in the direction of the overall trend. This, of course, is going up. Phase 1, and the moves against trend, phase 2. And we follow the market cyclicity like this, allowing us to find critical turning points, giving us opportunities to buy at a cheaper price, and of course sell at a more expensive price in an uptrend. So as you can see, there is selling positions. I'm just going to change color here. There is selling phases in a move upwards, and that's exactly what we're waiting for here. Now, with all due respect, we don't really want to be predominantly trading against trend, but when a market's so overbought like this, it may not just be a small phase 2. We may introduce a reversal and give us a higher reward trading opportunity. If that's your style, then fantastic. You've probably got this on your watch list. But even a small corrective move to the downside can still be 10 weeks, can still be 7 weeks. So that's 7 bars, 7 weeks worth of selling here. So it's definitely not to be ignored. Now, what we're looking for is this move back lower. And when we get in and around this area, we like to use the 20 moving average as a guideline. Then we'll decide how strong or weak the sellers are and how strong the buyers are going to be buyers are introduced back into the market to the upside. So as we start to move down our time frames now, you can see that yes, we are pulling back to the 20 moving average on this time frame, which could potentially be our opportunity to go long. But as I said, being so high and being so overbought, we definitely want to start to think about the market turn. We definitely want to think about if we are due a weekly pullback, how weak or strong are the sellers going to be? If we get strong selling in here, it's going to give us a fantastic opportunity on a smaller time frame. And that takes me to the 4-hour chart. The 4-hour chart is probably my most preferred time frame to trade. It eliminates the noise, the mess, the news from the 1-hour time frame, but it still provides cleaner and more frequent cycles than daily time frame. So it's a good opportunity and a good time frame to trade if you are, especially if you're new to trading, because you won't be bored with lack of opportunities being an end of day or weekly time frame trader, but it does eliminate the mess of a 1-hour chart. Now, just to have a look at this, I'm just going to draw out our cycles where we feel the markets are showing high to low points, and that is in these areas here. So what we now have is 2 low points and 2 high points. So we're now seeing a pattern of lower lows, lower highs, which is the pattern formed in our downtrend. Now, one more bar in here will allow us to confirm this is a high point. And again, this is a low point. Now, we want to be trading at the beginning of the move again to increase our reward. Intraday wise, we use 3 moving averages here, the 20, 50, 200. When price is typically above all 3, we look to buy. When price is typically below all 3, we look to sell. What we'll be looking to do here is actually target the 200 moving average, which is the green one. That's the average price for the last 200 4-hour bars. So it gives us a more significant idea of direction and trend. Having said that, now we're looking for a reversal. Of course, all 3 moving averages are not going to be in the correct stacking order. So we're going to use the 200 as our first intraday target. I'm going to wait for one more 4-hourly candle before I look to take this position. My entry will go 2 pips below the low of the candle. My stop loss will go 5 pips above the high of the candle. So I'll be looking at perhaps a 25 pip risk for a potential gain of 69.70 pips. So we've got a great risk to reward ratio there and a fantastic trade on our hands. A very similar move. In fact, let's just take a look at euro itself, because we want to see some euro weakness for us to, or for it to help our euro yen trade short. So the major here is euro dollar. Euro dollar, again, it hasn't been attractive, and it mirrors pretty much what the dollar index has been doing, which has been going completely sideways. But I do want you to mark out 1.2050 on your charts, which would be an intraday target should the euro sellers step in, and potentially could be an area to take the market back higher. So pick out 120.50 as your downside target should the sellers step in. If we look at cable, pound dollar, you can see pound dollar's been in this range between 142, 141. So it's been stuck, showing a 100 pip move in there. We've got just to show you on the 4-hour time frame, we've got a softer level of intraday support, which cannot be taken too seriously, but it's definitely a guideline when looking at and drawing support trend lines on an hourly time frame. But if failing to see a break and a bounce above this to target 142, because I do eventually see cable a lot higher, if I'm honest, especially towards the end of this year, I do want to see price break 142 and cycle upwards and onwards. Failing to do that, I can see price back down at 141. So that's going to show short-term pound selling. As we approach 141, as traders, we need to adapt and understand what's going to happen next. So just to look at pound yen, again, a very, very similar position to what we've seen on euro yen itself. So heavily overbought. It is up in the sky. For me personally, for me to be a buyer of this market, it's definitely too overbought. You're lacking reward here. You've got more reward selling to the downside, as price has recently been all the way down here. This phase itself has been very significant. We've had a 21-week buying opportunity, and then we've had a 5 or 6 week buying opportunity being phase one of an uptrend. So the buyers to myself have really exceeded themselves, and you can start to see more sellers creeping in this period. And over the last 2 weeks, there's definitely lack of buying taking place. So again, just to drop down to the 4-hourly time frame, we're starting to see the corrective pattern of a downtrend by looking at the lows that are forming in these areas here. So we've got our lows and our highs in there. That's your two highs, your two lows. We're now seeing lower high, lower low formation in a downtrend. And actually, momentum started to kick in a little bit stronger than we're seeing on euro. So on the next bar, or perhaps the close of this 4-hourly candle, 2 pips below the low, 5 pips above the high. I've got a 35 pip stop loss now for a potential gain of 106 pips. So both trades are looking at a 3-to-1 risk to reward ratio. You can see the sellers have crept in on the last hour. And this is great price action as well, because you've got strong selling taking place in here. But look at the price action that we've got in here. It's lack of buying. Buyers are failing to take price higher. And you can really see that by identifying these spikes in here in the wicks of the candles, where buyers are trying to push price higher, but there's too much selling pressure coming on. They're bringing price back down, and eventually the buyers buckled and sellers won the battle. So we're looking for a continuation lower here. Pound yen and euro yen both on the watch list. In fact, I'm really liking pound yen. So look to take the market down towards your 200 moving average as a great stalling point. But of course, you must manage your trade on price action. Analyze the individual bars. If you're continuing to see strong selling, stay in the trade. Look to maximize your reward. If buyers are coming in, it's a bit messy, a bit choppy, then you're here to make money, so you must take the profit off the table. Good stuff, guys. There is other stuff out there. There is lots of opportunities bubbling. I know we've had quite an indecisive, boring week, but do stay tuned. Speak to your coach or drop one of the team a message if you'd like to understand more about how to trade these reversals and, of course, what else we do. All the best, guys. Take care.